Hey guys, welcome back. Today, we'll be looking at the annual shareholder meeting of the Oracle of Omaha. That's right, I'm talking about no one other than Warrenbuffett. That's right, Warren Buffett. Today, we'll be discussing his annual shareholder letter of 2020. Let's dive right into it. So we're going to talk about
bonds. Oh my god.
Warren Buffett just threw shade at bond investors. I mean, bonds are so not the place to be today. Inflation much? Opportunity cost?
What are you? 100 years old?
Now, what did Buffett mean? On the 10-year treasury bond, you'll only be getting an annual yield of 0.93% of the face value every single year up to maturity. Now, that means if the face value of the bond is $1,000, every single year you'll be getting 0.93% of $1,000, which is just only $9.30. And at the end of 10 years, after waiting 10 years, you'll be just getting $93. That's really depressing. That's below the rate of inflation. Now, what is this like? That's like buying a company at a PE ratio of
10,752.
And earnings won't grow. It's just going to get stuck at that yield all the way up to maturity when you get everything back, including the principal and the last interest payment. Now, as with any letter, Warren Buffett starts off with the earnings of the company. Now, for fiscal year 2020, Berkshire had net earnings of approximately $42.5 billion. And that is split into four components. One is operating earnings, which amounts to $21.9 billion. The other is realized capital gains, which amounts to $4.9 billion. Then there's $26.7 billion of net unrealized capital gains. And lastly, an $11 billion write-off. That's right. Warren Buffett just lost $11 billion on one of his previous investments in precision cash parts. And what he did was that he wrote down the value of the company because he realized that after the pandemic, the value of the company would not be as high as he had previously thought. Let's move on to the next section. Now, what did Buffett dump $25 billion into? This one stock?
Let's give a round of applause too.
Berkshire Hathaway. That's right, Warren Buffett repurchased an astounding 80,000 Class A shares of Berkshire Hathaway, equal to a whopping $25 billion. Now, I know there's a lot of criticisms for share buybacks. However, think about it. If you're a value investor, what other opportunity is so great to increase your stake in a wonderful company like Berkshire Hathaway without you even reaching into your pocket? That means your stake in Apple, Verizon, BYD are all increasing without you even needing to spend out any money of your own. Now, on to 15 biggest investments held by Berkshire Hathaway. That's right, guys. When you look at these numbers, you're going to be blown away. First of all, you see BYD. So for the first 5 years, this company just sat there like a potato. It didn't do anything. But look at this. And the price went from $232 million in terms of the market cap all the way up to $5.8 billion. Now, listed here are also the two big investments that Buffett made throughout this last year. And that includes Chevron, which is the oil company, and Verizon, the big utility company. Now, here's Apple, the most valuable investment that Buffett has made for Berkshire Hathaway. In fact, this company was specifically mentioned in Buffett's annual letter when he was talking about the benefits of share buybacks. For Apple, although Buffett had only purchased a 5.2% stake in Apple, and Berkshire actually sold many shares because of share buybacks made by Apple, Berkshire actually owns 5.4% of Apple, an increase. Now, when you actually combine that with all the other share buybacks made at Berkshire Hathaway, a shareholder of Berkshire Hathaway owns a full 10% more in his or her indirect stake in Apple while even reaching into the pocket, thus displaying the power of share buybacks made appropriately. Now, let's move on to the next section, conglomerates. which do not have a pretty history. Now right here, Warren Buffett basically reveals the advantages of buying stocks on the stock market compared to buying a whole company. And that results from two reasons. Number one, when you want to buy a whole company on the stock market, you have to pay something called a control premium. It's an asinine thing, but basically you have to pay a certain amount above the prevailing market price of the public target company. And only that way will the actual shareholders agree to sell off to you. Otherwise, why am I just gonna sell the stock to you at the same price as this current market and have to wait that long for a deal to go through? Now second, the companies that are open for sale are not the ones with the strong, tough, competitive moats that Warren Buffett is seeking. A lot of times, the companies that want to sell off in full as quickly as possible are companies that are lacking in really high quality, which Buffett usually steers away from. Nevertheless, Warren Buffett alongside Charlie Munger have created an astounding, amazing track record by buying companies both on the stock market and by acquiring whole businesses. Yes, we have now reached the final section of Buffett's annual letter to shareholders. That's right, the annual meeting. And right here, Buffett has a little secret that he likes to tell you about the annual meeting. Thanks everyone for watching this video. Now since this is my first video, if you guys have any suggestions, leave them down below. If you like the video, please press like and please share. And last but not least, don't forget to
Smash the subscribe button.
see you guys next time.